Here at the Trading Group, we trade the S&P 500 E-mini. Every market has its own pros and cons, and in this video, we're going to briefly cover the pros and cons of the different markets, because to be a smart investor, you need to understand the risks and rewards.
The first investment to talk about are stocks. When you own a share of stock, or you own a stock, you own a piece of a company. It's called an equity instrument. So if a company divides up its company into 1 million parts, and you own one share, then you own 1/1,000,000th of that company. If you own 100,000 shares, then you would own 1/10 of that company. You actually own a component of the company. The pros to that are that you actually own a component of the company. You actually own equity in a company. The cons to that is it's very difficult if you don't have a lot of money to own a lot of shares in many companies to spread your risk. So you may not be able to diversify as much. So at Delta Trading, we don't purchase stocks. On the other hand, bonds are a debt instrument. When you purchase a bond, what you're really doing is loaning money to some sort of an institution. It might be a city. Maybe the city wants to build a bridge. They need money. They will sell you a bond. And a bond is really a promise that they will pay you back. And that promise includes how much they're going to pay you back with what amount of interest over what period of time. In the case of treasury notes, certain city or state or federal bonds, people tend to think that they're a safer investment, and they may be. Typically, they don't pay out as much money as that you would expect that you might want some of your other investments to pay, but they tend to be very safe. Indexes are another thing that you hear a lot of. You'll hear the Dow Jones Industrial Average, you'll hear the S&P 500, or the Russell, or the NASDAQ, things like that. And what an index is it's a collection of stocks in one big portfolio. So rather than buying an individual stock, you're actually buying a bunch of stocks at one time. So if the overall economy goes up, then your investment goes up. If the overall economy goes down, your investment goes down. And that's really nice because it tends to add some stability to what you're doing, and you diversify your risk over a bunch of different stocks. And indexes usually pick the best stocks in the field, so they tend to be a lot safer. We actually trade a futures contract based on an index called the S&P 500. Which brings me to the next thing that we want to talk about, futures and options. Very briefly, futures and options are contracts that you can purchase that put you into a particular buying position or selling position. One of the problems with futures and options when people first start learning to trade or day trade is they don't know what to trade because there are so many different things you can trade. We just trade one product, which is the S&P 500. But our charts and graphs, you could actually trade anything you want. You could trade currencies. Now, currencies have a really good advantage because there's a lot of different currencies that you can trade. The euro, the yen, the Australian dollar, things like that. But the problem is you have too many options. So when you're first learning to trade, you want to eliminate all those options because it gets confusing, and you want to concentrate on one thing. And like I said, we concentrate on an index called the S&P 500. Another thing you can trade with futures and options is commodities. Commodities are things that industries use a lot of times to build their products. For example, a tortilla factory might use corn or flour. These are commodities. Coffee, pork bellies, sugar, all these things are commodities. The thing about trading commodities is you have to really keep an eye on the news and the markets and the market conditions to know what's going on with the commodities. Or most people do. And again, when you learn how to trade with the Delta trading methodology, you're learning how to manage risk. You're learning risk and reward. And you're learning the auction theory. So we can trade commodities without having to learn about the news and all of that. But we don't want to go there too fast. We want to learn how to trade on an index first. And in fact, you'll probably never want to stop trading the S&P 500 because there's so many advantages to it.
We hope you enjoyed this video that was an excerpt directly out of our academy. To find out if you qualify to join as a member, call 888-646-8787 or go to SP500trader.com.